In this presentation, we will work a problem related to reconciliation of the statement of revenues, expenditures, and changes in fund balance, governmental funds to the statement of activities. Our information is going to be up top. We're going to put that information into the blue area down below. As we go through this, remember that the governmental funds are on a modified accrual basis and the government-wide activities are going to be on an accrual basis. So when we think about the reconciliation process between the governmental funds and the government-wide activities, we're looking into those items that are going to be different from the accrual basis and the modified accrual basis. You'll recall that the modified accrual basis doesn't have the long-term assets and long-term liabilities on the balance sheet, and is instead accounting for those items in essence as flow activities or temporary account type of activities, similar to what would be income statement type of account activities on the fund financial statements in terms of the governmental funds for the modified accrual basis. Our reconciliation process is going to be fairly straightforward. We're just basically going to lay out, we're going to say, hey, this is where we're going to start out at. We're going to say we're starting out with the net change in the total governmental funds balance. Here's the total governmental funds balance. And then we're going to look at those reconciling items and we're just going to list, hey, these are the differences because of this change, typically the change between the accrual basis and the modified accrual basis. We're going to reconcile then to the ending balance of this item here, the change in net position of the governmental activities. So we're just going to list out what those changes are so we could have that reconciliation process and know exactly what those differences are. As we start this out then, we see our data up top. We have the net change in total governmental funds. We have the change in net position of governmental activities. And notice this item we basically found a home for. We're going to put this up top. Let's do that now. That's going to be our starting point. And so I'm going to make this one, I can make this whole thing, let's say green. And this one, we're going to say that's our ending point. So we have it listed down here, but I'm not going to put the amount yet. I'll put the amount next to it. And that's what we want to end up at. But we want to do that calculation in order to get there. Then we have the capital outlay reported as expenditures. We have the long-term debt issuance, notes and leases. We have the depreciation expense. And then we have the accrued expenses that do not require use of current financial resources. And we have the revenues that do not provide current financial resources. First, we'll take a look at these items, the capital outlay reported as expenditures and the depreciation expense. When we think about the fund side of things, we're thinking about these capital outlays. Those are going to be types of things when we purchase the large capital assets. When we think of the capital assets on the government-wide level and we purchase capital assets, we would put it on the books as an asset, property, plant, and equipment, similar to for a for-profit type of organization, and then we would depreciate it. But when we think about the fund side of things, we don't do that for the governmental funds. We actually record it similar to like an expense as an expenditure. So we're going to have that difference. We're going to say, all right, if these are purchases of capital assets, and they were purchased on the funds, it's going to be recorded as a flow activity, a temporary account, kind of like an income statement account. And on the activity of the government-wide level, it's going to be reported as an asset. Then on the depreciation side of things, note that on the government-wide level, we're going to take that asset and then we'll depreciate it over time. When we think about the fund side of things, we're not going to do that, of course, because there is no capital asset on the books. We've recorded the whole capital outlays as they happened on the books of the fund side of things. So the depreciation then is going to be a difference. That's going to be something that will be on the accrual basis, government-wide level, but will not be on the modified accrual basis, which is the fund level. So the difference, we're going to say it's going to be this item, the 285,006 minus the 51,565. That's going to be the 233,441. And then I'm going to make these green. I'm going to say, okay, we found a home for that one. That one has a home now, so it's okay. And we're going to move on to the next one. Next, we're going to pick up this item, which says revenues that do not provide current financial resources. So we're going to say that there's some source of revenues that does not provide current financial resources. We might have something other than financial resources as for that revenue that's been given. So we might have some revenue component. We might have gotten something other than financial resources, then recording that as revenue debiting. In essence, we would think a debit to some kind of asset other than cash, other than a financial resource, and then we would credit the revenue account on an accrual basis, which is what we would do on the government-wide level, the entity as a whole. However, on the modified accrual basis, the fund level, so we're going to record down here some revenues in the statement of activities do not provide current financial resources and are not reported as revenue in the government funds. And therefore, that's going to be our description of the difference of that 46,752. We've now found a home for this one. I'm going to make that one green because green means it has a home, and that is good. Next, we're going to make this one yellow because this one doesn't have a home, and we're going to work on finding one for it. And that says that the long-term debt issuance, note, and leases. So now we have a long-term debt issuance. When we have long-term debt on the government-wide level, you would think that the transaction would be to credit the long-term debt and to debit possibly cash or something that was received for the issuance of the long-term debt. On the side of the funds, however, we don't have long-term debt. We don't record the long-term debt on the fund side of things, and therefore we may actually just record the debt as a flow type of activity on the funds as opposed to a long-term liability. So we're going to have this difference then in the reconciliation process. We're going to call that difference a debt proceeds provide current financial resources to governmental funds, but issuing debt increases long-term liabilities in the statement of net position. This is the amount of, and we're going to say negative. We're going to make this one is a negative item of the 369,722. So let's read that one more time. Debt proceeds provide current financial resources to governmental funds, which means they're going to be reported in essence as kind of activity, more like on an income statement type basis. But issuing debt increases long-term liabilities in the statement of net position, which means that's more of a balance sheet type of activity as you would normally think in the government-wide type of activity, as opposed to recording a flow type of activity, which would be the financial statement or the income statement, or similar to an income statement type of activity on the funds using that modified accrual basis. Okay, so let's make this one green up top. Green means home has been found, so we'll make that one green, and then we're left with this one, only one without a home, and so we'll find one now. Here we have accrued expenses that do not require use of financial resources. So we're thinking about an accrual, basically an adjusting entry is what we would think about. And in terms of normal accounting, accrual accounting, what will be used in the government-wide level. So on the government-wide level, we would have an accrual adjusting type entry here. However, because there's no financial resources for current financial resources here, it wouldn't be recorded on the fund levels, and that's going to be the result of, or that's going to result in our difference. We're going to call that difference. Some expenses reported in the statement of activities do not use current financial resources and are not reported as expenditures in the governmental funds. So this is going to be a negative, so we're going to pick up a negative of that 7160. Then we'll sum this up. I'm going to say this equals the sum of this column. It's going to pick up the whole thing because this is a merged cell, but that should be okay. And that then ties out to what we were hoping it would tie out to, which is this number given in our data, which is the indication that we have indeed done it correctly.